Welcome back, everybody, to the weekly market analysis. Before we get started, I just want to remind you to hit the like button and subscribe to the channel if you're not already. And if you find the content helpful, I want to also remind you that you can find me on Twitter at Mr. J. Thomason, and you can follow my Substack newsletter at befinanciallyfree.substack.com. The first half of my newsletters are free for all viewers. The second half is for premium subscribers only. So go ahead and check that out. The links to both my Twitter and my Substack are in the description below. And today, the focus that we are going to have is on whether or not the downside price action over the last few days is a bear trap, or if this is something that's going to continue into next week. And so starting off looking at the S&P 500, and I just want to call your attention briefly to one of the issues that TradingView has, especially when it comes to contract rollovers, which if you can see at the bottom of the screen, you can see that I've got right now these little buttons that are enabled to be visible, where it's showing you that the contract switched from the third quarter contract to the fourth quarter contract on the futures, because I look at the futures here on the charts. And the problem is, if you notice on the right side of my screen, it looks like the equity indices, particularly the S&P and the NASDAQ and the Dow, were up pretty substantially. But then if you look, so here we are on the S&P, but if you look up at the top here, where the NASDAQ is, it says where the S&P is, it says that we're only up 6 points on the day for 0.13%. And that's a lot different than what it's showing you. That's the result of the contract roll. And TradingView, for some reason, doesn't do a good job of orienting the closes properly. There's these glitches occasionally. You probably have noticed that. As well as, if you don't have the setting enabled that adjusts for contract changes, then if you notice, like, my trend line is all wrong, the price action looks different. See, it looks like it gaps up really substantially here. So I just want to call that out, because I don't want you to be confused as you look at these charts. Anyway, a couple things we'll take a look at on the S&P 500. You can see we still have bullish tide, so this means that the tide line is above the control line, and price is essentially sitting basically right on where the tide line should close at. And I'm kind of surprised that the tide line hasn't closed there. It's a little strange. And closed with a yellow candle, which suggests that we're more likely to see a little bit of upside it's neutral, but I would, in my opinion, when you transition from a red candle to a yellow candle, then that's a pretty good indicator that the momentum is returning, that the technicals are returning favorably. And so as it relates to the question of, is this a bear trap, my thought on this is that the downside price action is tricking people into thinking that we're just going to roll over here. Technically, we do have room to roll over and still maintain the long-term trend, or I guess the medium-term trend. We also could, in theory, fall back towards 4,400, just around the control line, and even just below the control line, and still maintain our positive tide and positive momentum. But I actually think that the setups appear to be pretty solid for the long side risk to reward. My study on the tide indicator that I developed and the strategy that I use with the tide indicator suggests that when price starts making contact with the tide line, that's usually a good time to statistically a high probability entry point to start dollar cost averaging in to the position. And so we've got nothing overbought or oversold here. And so I do want to call that out as being of note. Looking at the NASDAQ, we have a similar thing with the contract roll situation, so everything looks a little odd right now. But we've successfully tested the trend line once, and it looks like price wants to come back and potentially retest the trend line again or retest the tide line again. So I'm looking at the level that's, approximately, we'll say approximately 15,300 as a spot to look to see if price hits there. But in all reality, again, this is a situation where you can see the green candles on this indicator suggest that all the underlying technicals are still trending positive. And so I would imagine that this is actually a good spot to long. And then the Russell here, once again, we're kind of teetering back and forth in this range. Tide is currently bullish, but it doesn't look super convincing right now. Price is kind of hanging out right around the same spot that we kind of made lows in August in. So this would be a natural spot. I think it can, maybe move this here. I think that this is probably a natural spot to look for maybe a bounce. On the Russell, we will skip the Dow for now. The dollar, as of this week, is confirming a tide cross, closing the week up. And so this is obviously not a good sign for risk assets, or potentially not a good sign for risk assets, at least in terms of probabilities. The dollar looks like it's going to, my guess is that we'll see a little bit of a pullback on the dollar so that the trend can reset and then continue to push to the upside. That's, to me, the highest probability. The last time we had, I think I talked about this previously, the last time we had a dollar cross was back in July of 21, and that led to obviously the big bull run in the dollar that we saw. So that's something to be aware of. Bullish tide cross, I should say. Bullish momentum, bullish candles, everything is lining up for another dollar run here. US 10-year, really interesting here. We have not, we made obviously our another high, a new high, I would say, a new high for compared to 2022 back here in August, and we have not made a new swing high yet. And so what I'll be watching for is you can actually see the tide line is turning yellow. That means that one of the underlying indicators on that is at least neutral, if not potentially trending more bearish. So that's something I want to be aware of. We could see some downside here on the 10-year. And so I would watch out for that. But the tide is still strongly bullish. And so I would expect the yield to continue to increase in the near to medium term. Gold, I talked about this last week. Gold had popped above back above the tide line and basically staved off the impending tide cross that I was bearish tide cross that I was looking for. But then we've actually sold off throughout the week, including today having been up pretty considerably and then ending up closing barely down on the day. Look at that candle, looks ugly. And so to me, this is evidence that this trend is going to continue down. And so I would be looking for gold to continue to the downside. And I actually still, at this point, still my base case is that gold is going to make a bearish tide cross, and that would be not a good thing. And actually, I'm targeting on gold something between 1800 and 1832 before the move is over. And of course, that could take a couple of months. So obviously, gotta wait on any moves on gold. Crude oil. After our tide cross, if you recall, over the last few weeks, I've been talking about this coming basically for the last couple months, and or for the last month and a half, I guess. And what I want to point out specifically is that I had said once this cross was confirmed that price was going to come back and test the tide line. And we did get something of a test of that tide line. We actually came just below the 78 level, which is where I said I was looking for longs. And then we just have careened to the upside. Although I'm going to call out some caution on crude oil because we've had actually a couple of days worth of what I would consider to be news failures. So on Tuesday, on Tuesday we got obviously the news about the Saudis and the Russians continuing their production cuts through the rest of the year. Wednesday and Thursday we got inventory numbers which were bullish as heck, and yet in no case, let's see how high we got here. I mean, we haven't gotten higher than 86.0, or what was this? Yeah, let's see here. We haven't gotten any higher than 88.08 the last couple of days, and we've just continued to have like bullish news. And so I wouldn't call that a total news failure, but it does suggest to me that there is weakness, underlying weakness in crude. Maybe what we'll see here soon is another little pullback into the tide line. I think the positioning dynamics support a pullback in crude, and I'll show you guys that in just a little bit. So anyway, crude has gone too far too fast to go long here. It's better to just wait for price to come back to the tide line before you take long entries, because otherwise they're not going to be high probability. And then Bitcoin here, I feel like this has happened a couple of times. Yesterday we had a little bit of a pop. I don't actually know why that happened. I never heard any news, but similar to the last little pop, it's been basically sold since then. And so we're just kind of once again stuck in this little range right here. And I think what's concerning is that the longer we stay down here, the more likely that a negative bearish tide cross could happen. And that's not a good thing. Bearish tide crosses are not a good thing if you want to go back over the history of bearish tide crosses. So obviously we had a tide cross in January of 2022, and we know what happened for the rest of that year. Bearish tide cross ended up being around the bottom signal back in July of 2021, but that also, this whole bull run situation was very strange. Obviously we had FTX being a big part of the tail end of this bull run. We obviously had the tide cross around the time of the March 2020 lows, which was a crisis situation. Tide cross November 19, tide cross back during the 2018 bear market. So generally bearish tide crosses on Bitcoin suggests that price is going to at best probably go sideways. Of course we have basically been going sideways for most of the year, so that shouldn't be so much of a surprise. However, I will say that from a technical basis, Bitcoin is getting to be oversold. It's nearly oversold, I should say. So you'll want to watch out again for further pops. And usually in bullish tide, these are usually good times to buy. They're very rare occasions when they do happen. And price can move really far, really fast in crypto. So it's just something you want to be aware of. And so one of the things I wanted to pull up was my positioning chart. This is something I usually save for my premium subscribers, but I thought I'd share it here today. Part of the reason, again, why I was saying crude oil is kind of setting up for potentially a pullback is you've got, if you see where my mouse is right here, I'm showing the positioning of large commercials in the yellow bar, the large non-commercials in the red bar, and then the non-reportables or the small traders in the blue bar. And typically, I use a scoring system to decide to what extent something is at extreme speculative positioning. And in this case, this only gets 2 out of the 3 points because the commercials are super short and the large non-commercials are super long. But then the small unreportables are non-reportables are only at the 55th percentile, so they're slightly long. You'd like to see if this was going to get 3 points, you'd like to see this 55% much higher, actually over 75% there. It's not, so this only gets 2 out of 3 points, but still the speculators like this number has been going up steadily the last few weeks as crude oil has been going up in price. And so I want to call that out as being something that should be that's concerning if you're thinking about going long crude oil, because what it suggests is that a lot of people are largely already positioned long in oil, and so it's just something you want to be aware of. And then when you come back to the charts here, and you pull up, let me pull up my side-by-side crude oil chart here. This thing will load. We'll see if it will load. Sorry about that. I'm doing this in real time. When you pull up the crude oil chart, on the right panel you've got the daily chart. On the left panel you've got the weekly chart. And on the daily, I've got this all messed up. On the daily chart, you've actually got an overbought RSI, an overbought stochastic, and the MACD on the daily, at least in terms of the histogram, is actually declining. And so that suggests that momentum is starting to falter a little bit, whereas on the weekly, you've got the overbought stochastic, but the RSI is not quite overbought yet. So I would say that what I would be looking for is, I'm not sure that it's exactly the right time to take the short side of crude at this exact moment in time, but I'm going to be watching for it over the next week or two, because it's entirely possible that this weekly will come up into overbought territory on the RSI. And what I will also be watching for is to see if on the MACD on the weekly, if we start off the week with a lower number or a lower green bar, lower and lighter colored green bar, because that would be a signal that maybe crude oil is about to turn over and pull back for a time. I'm not saying it's going to crash, but it could pull back for a time. So I do want to call that out. So to me, the opportunities are in crude or in oil-related stocks. Another reason I want to point that out is I haven't updated the top part of this chart yet, so I'm going to change that for just a second. But what I want to show you specifically is if I update my chart, you can see up in the top right corner, you've got energy-related stocks, you've got uranium, and basically almost all of the oil-related stocks, as well as the dollar, that are overbought and have a positive, are in a +1 positive or more positive Z-score on a one-year trailing basis, which suggests that in terms of recent history as well as relative strength, there's room for these to come off, and so that's one reason why I would consider that that the oil space or the energy space is probably a good one to take a look at as it relates to potentially playing pullbacks or watching for a pullback, so that you can then enter long positions once everything resets. So that's going to be it for today. Again, you can follow my Twitter and my Substack newsletter. We'll have a new issue coming out on Sunday, and so you can check that out if you're interested. So we'll leave it at that for today. Hope you guys have a great weekend, and I'll see you guys next week.